Well, look, we talk about all these issues, right? Taxes and spending and border and abortion and all these other things. But the truth is, what most people care about right now, what even normal people care about, is the fact that they're poorer today. Everyone is. 17% inflation. That's what we've all experienced since Joe Biden took office. We got inflation numbers today a little bit hotter than usual, 3.4%. All this is basically terrible. Combine this with the fact Washington, D.C. hasn't stopped printing and spending money. In fact, they haven't even slowed down. Well, that makes me almost cringe as I introduce Peter Schiff, because I know he's probably got some horrible things to tell us. Joining me now, Chief Economist and Global Strategist, easy for me to say, at Euro Pacific Asset Management. Okay, Peter, I can't imagine you're going to be all sunshine and rainbows today, but please take it away.
Well, no, and you're absolutely correct. Americans are getting poorer, and they're going to get a lot poorer as long as the U.S. government continues to grow and spend their money. But the way the government has been choosing to spend money recently is by debt and borrowing. And in order to finance that, the Federal Reserve has printed a lot of money. And that is the source of the inflation. In fact, that is the very definition of inflation. It's an expansion of the supply of money, but not just money, credit. And we got some news last week that consumer credit has exploded to an all-time record as Americans continue to borrow to buy things that they don't earn enough money to afford. And all that means more upward pressure on prices. The Fed has done too little too late to put the inflation genie back in the bottle. And the Biden administration has done nothing. In fact, we've had very stimulative fiscal policy. We're running nearly $1 trillion of debt every quarter under Biden. And that means a lot more inflation, and prices are going much higher.
Okay, Peter, help me understand what this means. Let's focus on the consumer part, because this has been one of those trends, and I'm an idiot, but I know this is alarming and really, really bad. Consumer credit card debt through the roof, consumer savings bottoming out. Those two things combined are horrific beyond belief. What does it mean for a nation when the people itself drown in debt? Not just the government, the people themselves. What do we do when there's a personal debt crisis?
Yeah, and you know, the people are on the hook for the $34 trillion in government debt. I mean, where does the government get the money to pay the debt? From the people who are already broke and have their own debt. And in fact, Americans are a lot broker than they think if they try to factor in their personal share of that $34 trillion national debt. And of course, that's not all the debt. That's the tip of a debt iceberg. It's about $200 trillion in total when you look at all of the unfunded liabilities that Americans are on the hook for based on what the federal government has obligated them to pay. Now, obviously, because Americans are too broke to pay the debts, they're going to be inflated away. The Federal Reserve is going to be called on to monetize this debt, to print money. And so rather than Americans losing their money, they're going to lose the value of their money. The purchasing power of dollars is going to crash. And that means the price of everything that you buy with dollars is going to go way up.
Peter, can you help me understand something? And maybe this is more of a psychological question instead of a financial one. But the things you and I discuss here when we talk about inflation and debt and $1 trillion on the debt every 3 months and all these other things, these are not Republican or Democrat or libertarian issues. This is math. The debt crisis is mathematically guaranteed. No ifs, ands, buts. It's coming. Yet nobody in D.C., Republicans, Democrats, nobody acts as if it is coming. Can you explain that to me?
Well, the problem is it's been coming for a long time. And guys like me have been warning about it for a long time. And yet we haven't had a crisis yet. I mean, we've had financial crisis. In fact, we had another one in March of last year. But they were able to, sweep the problems under the rug with another round of bailouts. But because we've been able to do this, kick the can down the road for so many years, people on Washington now who maybe were concerned about these issues 5 or 10 years ago just assume that this can go on indefinitely because it hasn't become a crisis yet. And I think that kind of conceit is going to come back to bite us because we are going to have a massive sovereign debt and currency crisis. It's not a question of will we have one, but a question of when we have one. And the longer we wait for it, the worse it's going to be. Because between now and the crisis, the problems keep getting worse. We have more and more debt, and we have a more dysfunctional economy that is built on that foundation. And so when ultimately it collapses, it's going to be far more painful for far more people because it went on for so long.
Peter, can you explain what it looks like? You mentioned pain, you mentioned the crisis. I talk about this as well. But for a normal person, they don't understand how that applies to them. There's a family, a bunch of them watching us right now in their living room. What does it mean to them that the country has a debt crisis? What does that mean?
Well, it's going to mean a much lower standard of living for everybody. I mean, most Americans, they go to a job, or maybe they don't have a job, right? They're retired, or whatever they're doing, they're unemployed, but they buy a lot of stuff. They go to the store, they buy all sorts of things, but they don't actually help produce any of those things. So where's all this stuff coming from, right? Well, it's coming from foreign countries, by and large. It's coming from Asia. People are producing stuff and sending it here. And what are we giving them in exchange? We're giving them our paper. We're giving them the dollars that we print. But what are they doing with them? Because, we're not making stuff for them to buy. So they buy our financial assets. They buy our bonds, or maybe they buy up some stocks or real estate here. But I think as the dollar really starts to fall, our creditors are not going to want to recycle their trade surpluses into our financial assets. And the dollar is going to crash. And then all the goods that we import, which is pretty much everything we consume, are going to be too expensive for Americans to afford. And of course, a lot of Americans also buy stuff on credit. Well, where's the credit coming from? Where's the savings? Well, that's coming from abroad too. Well, when foreigners don't want to make our savings available to them, and they don't want to provide us with goods, then our whole way of life is going to come crashing down. And Americans are going to have to accept a much lower standard of living, where they end up working a lot more, but consuming a lot less.
Jeez. Peter, when? Well, I know that's an opinion question, but when? I'll tell you, the fact we're adding $1 trillion every 3 months, and knowing that is increasing with interest rates and whatnot, that tells me it's got to be soon. It may not be tomorrow, but it's coming soon, right?
Well, it's obviously coming a lot sooner than I thought it was 5 or 10 years ago or more, because this is not the first time I've pointed these problems out. It's just that now they're bigger than whenever I pointed them out in the past. And, we've seen some of the rumblings. Again, we've had some big problems, but we haven't had the final crisis. But again, that's just a function of time. We've been able to fool more people and go deeper into debt and allow the underlying structural problems to get much worse. So yeah, I mean, we're literally living on borrowed time. I don't know. I mean, every day I go to sleep, we could wake up in a new reality, because I think our fate will be sealed in the foreign markets, because that's really our major creditors and our major suppliers. And they're the ones that are going to, pull the rug out from under this. But people should be prepared. I mean, I've been prepared for a long time personally in my investment portfolio at Europe Pacific Asset Management. We're building portfolios for people to protect their wealth, their purchasing power from a dollar crisis, from a U.S. sovereign debt crisis. That's really all you can do. I mean, we can't avert the crisis. There's nothing that I can do to stop it. It's going to happen. All I can try to do is minimize the financial damage to myself and to my clients. And that's what I'm trying to do. And of course, if enough people prepare in the way that I'm suggesting, that's also going to be good for the country. Because if everybody is broke, that's an even bigger problem. If at least some people don't go broke in America, then we have a group of people that can help finance the rebuilding of the country, because we're going to need to rebuild a lot of critical manufacturing infrastructure that we've lost over the decades.
Jeez. Peter, thank you for giving us some hard truths. More people should be doing this daily. Thank you so much. I appreciate it.